Delving into the hidden depths of the finance world, our 2024 analysis brings you exclusive insights from the very top. Are you ready to unlock these secrets? Stay with us as we not only unveil this privileged knowledge, but also arm you with 5 dynamic strategies to capitalize on a promising 2024. Your journey to financial foresight starts now. Forecasts for 2024 predict the global economy to surpass current expectations significantly. This optimism is rooted in several factors: a surge in income growth, diminishing inflation rates, a resilient and expanding job market, and a likely resurgence in the manufacturing sector. Moreover, central banks around the globe might possess the capacity to slash interest rates, a strategic move to deter potential economic deceleration and mitigate the risks of a recession. The projection for global GDP growth in 2024 is set at an encouraging 2.6%, notably higher than the 2.1% consensus among economists surveyed by Bloomberg. This positive outlook isn't restricted to a few regions. It extends to 8 of the 9 largest economies worldwide. In this optimistic scenario, the United States is particularly highlighted, with its economic growth poised to surpass that of other developed nations. In an intriguing contrast, even regions like the Eurozone, which have witnessed relatively modest real GDP growth, are experiencing a robust labor market. Evidently, the unemployment rate in these economies has fallen by approximately 0.5 percentage points below the levels seen before the pandemic. A significant cooling off of inflation is being observed across both G10 and emerging market economies. Goldman Sachs research projects a notable decrease in core inflation rates, from the current 3% to a range of 2.5% across the G10 countries, with Japan as an exception. This trend aligns closely with the inflation targets set by central banks, expected to be met by the end of 2024. The analysis estimates a relatively low probability of a recession in the United States, pegged at just 15% in the forthcoming 12 months. This outlook is supported by several pivotal growth factors: an upturn in real disposable income, a diminishing impact of rate hikes and fiscal policies on economic growth, and an anticipated rebound in the manufacturing sector. Additionally, the need for central banks to induce a recession to regulate inflation appears increasingly unlikely. The scenario for interest rate cuts presents a varied picture. In developed markets, such reductions are not anticipated until the latter half of 2024, unless economic growth falls short of expectations. Conversely, emerging markets could experience these policy cuts earlier. Japan and China stand out due to their distinctive approaches to inflation and policy stimulus. If you find our videos insightful and enjoy our approach, please consider showing your support with a subscription. Now, let's dive into the ideal investment strategies for 2024. Given the expected strong performance across major economies, investing in a globally diversified equity portfolio can capitalize on growth in various regions, especially in the US and other leading economies showing strong GDP growth forecasts. With the anticipated recovery in manufacturing and strong labor markets, sectors like industrial, technology, and consumer goods might present growth opportunities. Considering the cooling inflation, but still present, inflation-hedged assets like Treasury inflation-protected securities, TIPS, or commodities could offer protection against any unexpected inflation spikes. The potential for interest rate cuts in the latter half of 2024 suggests being cautious with fixed-income investments, particularly long-term bonds that are sensitive to rate changes. Short-term bonds or floating-rate notes could be more resilient to interest rate fluctuations. With the possibility of earlier rate cuts in emerging markets, there could be opportunities in these regions, albeit with a mindful approach towards the inherent risks. We hope our insights have given you a glimpse into what 2024 might hold and how you can position yourself advantageously. Our aim is to deliver specific, high-quality content, and as we embark on this journey, your feedback is invaluable. See you next time on Focus Finance.